There's a famous quote that says, "Don't compare yourself to others." This is a good quote for personal development. However, in investing, it's the total opposite. Comparing one company with another is one of the key fundamentals to gauge whether the risk is worth the reward. For you OG Wealth Gambit viewers, you know we used to have a series on this channel called Battle of the FinTechs, where we would put FinTechs side by side to see who was the ultimate king of the FinTechs. So far, we've covered PayPal, Robinhood, Upstart, Lending Club, Bank, and others. So if you want to check those out after this video, we've linked them in the description below. For all of you still holding the Sofi line despite hitting new all-time lows almost every day it seems, here's a digital trophy. Your guys' resolve is incredible. Strength and honor.
Strength and honor. Strength and honor. Strength and honor.
As Jim Rogers said, the last leg of a bull market always ends in hysteria. The last leg of a bear market always ends in panic. With the amount of panic we're seeing out there, could this be the last leg of the downtrend? In today's video, we'll go over two of the most promising fintechs today, Social Finance, aka Sofi, and Chime, and do a quick overview of both companies, including their products, members, and basically who has the edge in this fintech battle. Who will reign supreme? Stay tuned and find out. Quick disclaimer, we're not financial advisors and none of this is financial advice, so always do your own due diligence. Before we head on to our topic, to all of our Sofian soldiers, we have officially opened the doors to our Patreon. So if you want to see our Wealth Gambit official watch list, Sofi price targets and buy ranges plus updates, access to our Sofi position, numbers and all, and a lot more, make sure to check out our Patreon. Since this is our first time offering Patreon, it'll only be open for a limited time. The doors will be closing at 4:20 p.m. California time on the 30th, and we don't know when we'll be opening them back up. So make sure you don't miss it. And as a token of our appreciation, we'll be shouting out each active Wealth Gambit Patreon member in every single video from the moment they join and after. So a special shout out to Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Jordan Worth, aka Mr. Welfare, Kartik Patel, and Gregory Villar. Also, make sure to check out Gregory's YouTube channel if you want to know how to travel the world efficiently. We've linked his channel in the description. We appreciate your guys' full support of this channel and we'll make it our duty to provide you as much value as possible.
Let the battle begin! Get ready for the next battle.
And now, dragged by outside circumstances and not out of fundamental changes, Sofi is now valued at around $5.4 billion at the time of recording this. Chime, our other contender on the other side of the ring, was valued at around $25 billion in 2021. The company has received funding from leading investors including Sequoia Capital Global Equities, General Atlantic, Tiger Global, Dragoneer, SoftBank Vision Fund 2, and many others. So it looks like SoftBank has their bets spread on both fintechs. Chime, according to Forbes, was reportedly set to go public in March of this year at a valuation between $35 billion and $45 billion, but delayed its IPO until the second half of this year due to its plan on releasing new products including lending and investing. If you look at these two company valuations, Chime seems to have more of an edge, but is bigger always better?
That's what she said.
Let's have a closer look. Chime was founded in 2013 by its CEO Chris Britt and CTO Ryan King. The company was founded on a premise that basic banking services should be helpful, easy, and free. Some banks that we've used in the past have definitely not been helpful, easy, or free, so it's a breath of fresh air to see these fintechs leveraging technology to make banking easier and more efficient. Chime is a financial technology company, not a bank, as the company would say, that partners with regional banks to design member-first financial products. Chime's platform lets its members access their bank accounts with fee-free overdraft, checking account, and debit account with no monthly fees, the chance to receive early access to their paychecks, the help to improve their credit, access to over 60,000 plus fee-free ATMs at stores like Walgreens, 7-Eleven, CVS Pharmacy, and a lot more. Send and receive money and secure their money, and 0.5% annual percentage yield savings account. Chime is committed to profit with its members, not from them. Its platform is supervised by its bank partners, Bancorp Bank and Stride Bank, and is regulated by government agencies such as FDIC and the OCC. Here's Chime's CEO Chris Britt talking about looking into launching new products on their platform.
Hey, Tyler. Chime's latest funding round makes it one of the most valuable private companies in what's been a pretty hot sector this year, fintech. After raising just under $500 million last week, the company is now valued at $14.5 billion. That's double what it was worth on paper in December. And in just 18 months, Chime's valuation soared 900%. Big investors in this latest round include Coatue, General Atlantic, and Dragoneer. That puts Chime's price tag above popular trading app Robinhood, which just this week announced another cash injection that values it at $11.7 billion. Stripe, meanwhile, still tops the list at $36 billion. These private fintech companies are weathering the pandemic pretty well as people rely more on digital banking. But the traditional sector, it's going in the other direction. Take a look. The KBW Banking Index is down about 30% this year. Chime and other so-called challenger banks aren't actually banks, though. They're actually software platforms. They handle the front end. For example, things like user experience and customer acquisition. And the deposits, meanwhile, those are held elsewhere with their FDIC-insured partner banks. Kelly, Tyler, back to you.
Kate, stay right there. We want to bring in Chris Britt. He is the CEO of Chime. Chris, it's great to have you here. And what do you think accounts for your ability to kind of jump right to the head of the pack at a time when fintech valuations and the competitive landscape has, never been more popular?
Thanks. Look, we don't measure success by the size of the round or, the valuation levels. We're really looking at helping a huge segment of Americans that have a lot of anxiety around their finances right now. There's a huge portion of America that are still just trying to make things work. I mean, we've seen as much as almost 10% of Chime members that we've seen receive unemployment benefits. So, there's a lot of challenges people have in America, and I think the investors just saw a huge opportunity to deliver financial services in a new way, deliver it through a consumer technology company that partners with banks. I appreciate the intro, you guys clarifying that we're not a bank, because we don't position ourselves or say that we're a bank, but we offer banking service with our partners. But look, we're thrilled with this new injection of financing from some of the foremost growth investors in the world, like Tiger Global and Iconic, and of course, our close partners at Coatue.
Let me ask Chris what you plan on doing with the funds, because if I recall that you had some technological issues a couple of months ago, an outage, but I also know that technology is a big reason why you're able to offer some differentiating products and services, like the ability to get your paycheck, before you can typically get it from your traditional bank. So tell me about kind of the need to invest there and what else you're going to do with the funds.
Well, I don't think our plans changed too dramatically. We were already very well capitalized, and so this financing was somewhat opportunistic, but we're going to continue to focus on launching new products that help this mainstream middle-income consumer that we serve. We have a service that allows you to get your paycheck a few days early. We have a service called Spot Me that lets you take the account negative without charging you a $35 overdraft fee like most banks in America do. And then most recently in June, we announced the launch of our Credit Builder credit card product, and that's had amazing results. I mean, the average consumer that uses this product, according to a study by TransUnion, has increased their credit score on average by 30 points. So I think that trifecta of products has really served us well, and we intend to very aggressively invest in the people and the team to build out additional products to serve this segment, and then also just stay aggressive on the acquisition side and invest in technology to make sure that we are, really running a tight ship here.
Chime's products are no doubt a great deal compared to traditional banks, but when compared to SoFi, this is where you'll start to have a change of heart.
Yeah, let's take a look at it.
These are all the products that SoFi is offering, from different kinds of loans, investing, credit cards, banking, insurance, financial insight, and business solutions. Chime's offerings don't even represent half of SoFi's. Like we mentioned with Apple in some previous videos, you ever wonder why Apple keeps dropping new products like Apple TV, iPads, new iPhones, and everything else? It's to widen their total addressable market. And it looks like SoFi is doing just that with its products and services, hence the one-stop shop. Since SoFi is officially a bank, it can offer better yields. For instance, Chime is offering a 0.5 annual percentage yield for savings accounts, while SoFi, on the other hand, is offering 1.25% APY on its SoFi checking and savings account, which is 150% greater than what Chime is offering. According to Statista.com, Chime has more than 12 million account holders as of 2021, making it the largest consumer account holder among other fintechs. FinTechs. Chime has been consistently gaining members since 2017. This might be due to the fact that Chime is partnering with regional banks. Partnering with banks is like hitting two birds with one stone.
So I figured out a way to kill two birds with one stone. Like this.
Once they're partnered with a bank, the bank will use their technology solutions and they automatically gain the bank's customers. Sofi, on the other hand, has also been consistently gaining members since 2019, though not as many as Chime. Sofi had almost 3.5 million members in 2021. The number of members and customers say a lot, but a deeper battle lies with how these two generate income. Let's take a look at how these fintechs make their money. Chime mostly generates its revenue through interchange fees. It makes money out of the transaction fees that merchants pay to the card issuing banks whenever a customer uses a debit or credit card to purchase from their store. According to Finty.com, Chime also generates income through interest on cash. Chime lends the funds gathered through savings accounts to other financial institutions and banks on a short-term basis, which gains interest at an interbank rate. You might wonder, fees are small amounts we usually pay for transactions, but if you think about how many accounts Chime has and how many transactions each account makes every single day, and you know what that adds up to? There is, however, a con to this. With the current market condition that we're facing today, inflation, multiple interest rate hikes, people are expected to spend less, which means there will be fewer transactions. If you think about it, Chime relies heavily on transaction fees, and if there are less transactions, this may seem like bad news for the revenue stream. Sofi, on the other hand, has three business segments that generate revenue: lending, financial services, and the technology platform, which makes it very versatile against any market condition. If you're still watching at this point of the video, comment down below Sofi versus Chime to get automatically shouted out in our up and coming videos. Chime today seems to be focused on a payment processing platform, wherein Sofi seems to be focusing on all of finance. This is where Sofi shines. Sofi isn't just helping consumers with their financial situations, they're also helping other fintechs through Galileo. There's a saying during a gold rush, the best person to be is the one selling the shovels. We here at Wealth Gambit don't think that's necessarily true. After all, some people who ended up actually finding gold got filthy stinking rich. This is why we love Sofi. Not only are they selling the shovels through Galileo, but they're also digging for gold. And that, in our non-financial advisor opinion, is the best position to be in. Comparing Sofi to Chime, we have to give credit to both fintechs. After all, they've paved the way for the future of finance. However, we have to give the victory to Sofi. After all, Chime does use Galileo. This means if Sofi wins, they win. If Chime somehow wins, Sofi still wins because Chime uses Galileo. Sofi not only sells the shovels, but they're also out there in the trenches, sleeves rolled up, digging for gold. It seems to us that Chime and Sofi are like these carrots rooted on the ground. For Chime, we see huge numbers and huge valuations, but in reality, its platform offers less. That's why its management is still looking for new product opportunities at the moment. In Sofi, however, we see a crashing valuation, but in reality, it is well rooted and offers more value to its members. Shout out to all of you who commented, "I'm buying more Sofi" on one of our videos. We greatly appreciate your support. And if you haven't already, follow our social media pages at Wealth Gambit, and also join our Sofi investor group on Facebook. There's a lot of discussion going on there about Sofi, and you don't want to miss any of that. Don't forget to subscribe and give this video a thumbs up for the YouTube algorithm. Thanks for watching. We greatly appreciate it. And until next time, peace.